Recent survey from Kelly Services finding that although just 28% are seriously thinking of quitting their jobs, almost half of workers say that they are delivering the, quote, bare minimum at work. So what does this workplace fatigue mean for companies, and how can leaders keep talent motivated? Peter Quigley, CEO of Kelly Services, a global staffing company, joining us now. Peter, we'll get to that survey in a minute, but first I want to get your reaction to the jobs report that we got out this morning. 209,000 jobs added to the U.S. economy, unemployment ticking down 3.6%. Is this consistent with the activity that you're seeing at Kelly Services?
Yeah, I think it is, even though it's a little lighter than perhaps we expected in terms of new jobs. The fact is that the labor market is still tight, and companies, our customers, continue to put an emphasis on both attracting and retaining employees to deliver their work.
Peter, Diane here. Want to ask you, in terms of what you're seeing in your survey data, is that theme of quiet quitting still playing out based on your numbers?
Yeah, so we interviewed more than 1,000 employees in 13 different countries, and the data is pretty clear. Data are pretty clear that there is still a sense of quitting or just doing the bare minimum particularly in workplaces where the employees feel a lack of a sense of belonging, engagement, opportunity to have career opportunities. We also show that the best performing companies are quite the opposite, that their employees are engaged, they feel motivated, they feel a sense of belonging. So it's not all bad news, but companies that aren't focused on employee engagement should take note.
Peter, what are you seeing in terms of average weekly hours worked? We did see that tick slightly high at 34.4 hours per week. But of course, we have seen companies reducing the number of hours that workers need. Are you seeing that from the companies that you work with? And what does that signal just in terms of future job cuts?
Yeah, I think it's been pretty steady, notwithstanding probably some softening. But companies are using a lot of different strategies to deal with this unprecedented labor market in a post-pandemic environment. And so hanging on to workers but reducing hours is a very common strategy. And they have still scars from the fact that they couldn't find people during the recovery from the pandemic when it was recruiting at all costs. So companies are trying to do a better job. One of the things that we've heard from companies a year ago was, am I paying enough? Now they're asking, am I paying too much? So there's a little bit of a shift in the sentiment among leaders.
Which industries are asking that question, am I paying too much, or is this across the board?
Well, it's pretty much across the board in the industries we support. We're not in healthcare, so I can't speak to that. But companies are very sensitive to being resilient during the downturn whenever, if it ever does happen. I heard Dana's comments about it being potentially honest today. But companies are trying to create some resilience and some flex in their workforce and in their compensation schemes to deal with that.
Peter, when you take a look at the total non-farm payroll employment, hitting a new record, 156.2 million. You mentioned labor shortage. How big of an issue is that still here for companies trying to find the workers?
Well, when we survey, our survey suggests that almost half of the CEOs, when they think about their workforce, it's attracting and retaining talent that is their number one priority for the remainder of this year. So notwithstanding some macroeconomic conditions, companies are still very concerned about hanging on and then finding talent. And the number of, whether it's job openings, the unemployment rate, even the relatively moderating job growth, it still is a tight labor market. And it's not just in any one industry. It's across the board with companies trying to create strategies around how to attract and retain talent, not just compensation. It's not just a compensation game. It's got to be about creating a inclusive workplace, flexibility. Individuals have choices post-pandemic to find flexible work arrangements. And so that is top of mind for employees as well.
Peter, what's the most successful strategy, do you think, just in terms of what companies have tried, those that are able to retain the workers? What is the emphasis?
Well, I think it's got to be on the complete value proposition for an employee. So it is compensation, but flexibility is a huge benefit if it's possible. It's not going to be possible in all situations, production environments, et cetera, but allowing individuals to not make work the center of their life, but work be an important part of it, but having flexibility, having career opportunities, focusing on upskilling and reskilling so people feel like they have a future. Those are all strategies that the most successful companies that we both survey and work with deploy to deal with this labor market.
Peter, you talked about some of your companies being concerned about attracting and retaining talent. A big part of retention is pay. What are you hearing in terms of willingness to not just, you said there has been concerns about pay. Am I paying too much? But in terms of retention, is there a willingness to increase pay or at least, match?
Yeah, I think the sentiment largely is that you've got to at least maintain competitive wages in order to retain talent. So companies are looking not only at the hourly wages or the salary, but also comp and benefits to see about creating a complete reward package for their employees. So a number of these strategies are beneficial when it comes to retaining, but compensation is always going to be in the top 2 or 3 on the part of an employee in terms of the reward for their commitment to an organization and the effort that they put in.
Peter, looking forward here, the sector that's facing the biggest shortage in terms of labor, where we'll see that strength here on out for the second half of the year. What do you think that's going to be? Is it services?
Probably. I would think so. I think it's this environment is, I think, striking because of the variability in where jobs have been created and lost over the course of the last year anyway. But I think services is an area that potentially has some downside.
All right, Peter Quigley, Kelly Services CEO. Thanks so much for joining us. Once again, let's recap the numbers that we just got out this morning. June's employment report, 209,000 jobs added to the economy. Unemployment, 3.6%. Average hourly wages ticking slightly higher here, up 4.4% on a year-over-year basis. This is the first month in 15 months where we have seen a miss on the non-farm payroll number there. It didn't come in above consensus, coming in below what the street was looking for. Street was looking for 230,000, coming in 209,000. Average hourly earnings on a month-over-month basis coming in at up of 0.4%.